it can't be great knowing that you've had people buy in and that are down infinite. Like your community, your Discord, I'm sure looks like shit once this happens. Is that enough of a motivation to not be so predatory on your tokenomics, which, Athena probably is one of those examples that launched at a very low float, tried to create a lot of hype. They did all the Axie Infinity stuff. We can bring up the Axie chart because that was probably the equivalent of last cycle, where this thing, it ran up infinite based on a Ponzi loop where you had to keep buying more tokens to farm more tokens, and they started throwing gasoline on the fire. And this chart is epic. I mean,
It's
I
insane.
remember this when it was like at like 100 plus. Some of the seed investors that were up like 1,000x were asking me if they should sell. I'm like, you haven't sold. What are you doing? Like, how are you? They're like, everything's unlocked, and they still haven't sold at $100. I'm like, what? It's like, oh, I think it's gonna go to 250. What's going on? GM everybody, or hopefully still a good morning. It's episode 50 of Steady Lads. I'm here with Justin and Taiki. Look, is it the bear market? Is it back? I don't know, but we talked about this before the show, and Steady Lads was forged in the depths of the bear market.
You merely adopted the dark. I was born in it, molded by it.
We're happy to keep grinding through thick and thin and think about the space, keep learning, and answer the question: who do we blame this for?
Why are our coins going down? Who do we blame?
Not just down. It's like the charts are, murder. They just look like coins are dying. And Donald was asking, does this constitute the death of meme coins, certain meme coins like Bowden? We'll look at some of those charts. But yeah, I'm sure not everyone is in the best mood, but we're here to provide some commentary and not just entertainment, but hopefully some good thoughts. And we'll talk about prediction markets as well. That seems to be one of the few hot parts of the market right now. So we'll look at what's happening there. So a little bit of a sobering for the market. I would say altcoins were already down quite a lot, and now it's majors as well. Unfortunately, it looks like the governments are dumping on us. It's kind of painful when that happens, right, guys? Like Germany starting World War III now.
I do remember when the U.S. government started selling its Bitcoin, that actually marked sort of like a local bottom, and we just went up from there. So I've seen some hopium on Twitter of people saying, this Germany selling is marking the latest bottom.
We have Germany, we have some of the U.S. coins, and then we got Mt. Gox. So there's some big stuff. Ultimately, it needs to get digested,
and we have the ETH unlocks coming too. And, if the market's taking a bearish turn, who knows how much inflow there will be to offset that.
I'm not too worried about ETH, but it does go to show you how narrative starts to form around just a single big buyer or seller. I remember we had shows and endless people talking about how ETH BTC was awful during the Bitcoin run. And it was all because, like I was saying at the time, it was just single seller. It was just Celsius was liquidating, and they had decided to just only sell ETH. I don't know if it was some BTC Maxi at Celsius liquidation, but they were only selling their ETH. And that just kind of drove a certain narrative into the market around ETH BTC. But now that's over. Now BTC is the one that has, these idiosyncratic sellers.
But I wanted to ask you guys, it feels like there was some incredible news that came out this week that no one cared about. So Trump seems to be the likely winner. That's what we'll talk about that later. The prediction markets are calling that. And Trump also announced he wants to create a crypto strategic reserve for the U.S. government and buy Bitcoin and I think ETH as well, which, sounds to me like pretty wild news. Clearly, the market doesn't think he'll follow through on that. But it seems to me there would actually be a good chance that he would make that happen if elected.
It's a huge deal if it happens. It's possible. I wouldn't say the market's not the market's, like I said, it's not pricing in or not pricing in. The market is just absorbing billions of dollars of, forced selling. And these government sellers, like, it's not like they're trying to get good execution. They probably don't mind nuking the chart because they're hitting their competitor to their fiat. So if they just get bad execution, but they drive the price down more and make the chart look like crap, they're probably okay with it. I think there was a tweet by our favorite master manipulator of the media, Justin Sun, saying he's willing to purchase all of the BTC off market to minimize. And we see Gabriel there saying it's the hero we need. Look, like I take this with a grain of salt. Justin was trying to buy Credit Suisse when like Credit Suisse was falling. He was like trying to put a bid in. I'll bid 3.4 billion in ETH if you just let me buy Credit Suisse. I don't really like. I don't know that he's like serious. But even if he was, I feel like the German government and having seen how the ECB and those officials talk about how much they hate crypto, they probably just take a Schadenfreude joy out of the chart that they're causing, and they're willing to take $100 million less just to do it.
Yeah, they're probably like scrolling down CT and just laughing at all the despair and capitulation that they're seeing on the timeline.
Like Arthur Hayes, but like actually powerful. Liquidate the plebs, run the stock.
Yeah. It's sad they're doing it this way, Jordi. This could be a whole new line of business for Selene Capital. I mean, we need governments calling you to execute the sales. They shouldn't just be doing it themselves.
Yeah, so they used to do auctions. The U.S. government has done a lot of successful auctions where I saw chatter that they might even go for a premium because they're clean Bitcoin. If they're given out by the government, that means that at that point they're considered clean. You don't have to worry about any tainted, transactions. So they could go for a premium if they just sold them instead of selling them on the market. And there are buyers. I mean, DRW was buying these like big chunks, and I think that would be a much better way to go. Not sure why they stopped doing those. Seems like a lose-lose.
Yeah. Do you want to pull up like some of the altcoin charts? I mean, because they're the ones absolutely getting decimated.
Let's start with we have a little Bode Leonidas tweet here, and we were talking. We want to get Taiki's reaction to
my reaction.
Look, Taiki, look, airdrops this way. Just stay. Airdrops this way.
I really believed in the tech.
You and who in that cart?
It's me.
We're going to talk about this today, but one of the most dangerous, pervasive, things that trick people is when they're told that there's like a second way to make money. Like one way is like the price, and yeah, maybe price goes down, but you're going to get this like amazing yield. Like, you remember like the 3-digit yields of like Olympus DAO, you get like 200.
And Hex. That was Hex, right?
Hex, it was more like 20. It wasn't as like, insane yield, but it made you feel like, okay, I'm kind of hedged. Like even if the price goes down, I'm getting the yield. And then there was the airdrop meta, which is what, Taiki was trying to catch there, which is, yeah, maybe Celestia goes down, but I'm going to get airdrops that are going to be worth more than that amount.
Yeah, maybe I fell for because I was like studying last cycle, and I think SafeMoon hit like 20 billion or something, right? And I was like wondering, well, how did that even happen? And I realized that the TikTok narrative was, well, it doesn't matter if it goes down because there's like a 10% tax that like goes back in. Like if you hold your coins, the sellers pay a 10% tax and it goes like back to the holders. So it's like this infinite yield. So it's kind of like that, right?
That's a great example of this like 2-tier approach. Like don't look at the price. There's a 10% tax, and we're gonna chop that up between us. So fine once we're down 99%. Don't worry.
Yeah.
Let's bring the charts up. I mean, it's kind of painful to look at some of these, but we do have to reflect right now and think about why we're making new lows on a bunch of stuff.
And let's start with WorldCoin. Actually, WorldCoin's a good one because 50 weeks ago, it was the first thing we talked about, if you guys recall. I got my eyeball scanned. I had some great pictures from that. And this was sort of the start of the bull market, was when WorldCoin was first launching, if you guys remember that.
Yeah, they did their loop. I mean, it was the definition, like the poster boy of low float, high FTV, tiny float, like really, really. Even if I'm looking now, it looks like 2%. So 2% float. It ran up pretty hard. You know, it got these Korea listings, and the Upbit apes were buying it. It got it up to like $100 billion. That might have been when like ChatGPT 4 was coming out and all this stuff. We're getting near to unlocks in some of these coins, and we can look at some more that are nearing unlocks. But I think WorldCoin, you can see the chart started in August, so I'm guessing that in 1 month on this chart is when the 1 year unlocks start to happen. Yeah, I mean, this chart is pretty brutal. It's
Well, I think also the company is selling, what, 17 million or $15 million a day or something like that, I was reading. There's just like a crazy amount. The company has even announced that they're doing this.
yeah, they're more transparent than other people who are also selling, but maybe not talking about it. I think it's a lot of the founders are doing it themselves. They're realizing that this is their like one last window when they're the only ones that have tokens before everybody else get theirs. And especially the ones where like the investors are still up a lot because the round was done in the 9 figures. So they're like, well, my guys are still going to be up, multi-X. They should shut up and like just let me like sell. Fair enough. So the reality is like the price is going to go down no matter what. Like no matter who sells first, it's going to be down a lot more than even it is now once all the unlocks happen. So the question is, who do we blame this for? Or do we blame for this?
It should be, yeah.
Maybe we can bring out this tweet, and we can look at the sentiment here on Twitter. Yeah, so we'll talk about the Tehran thoughts here about OTC, but if you look at the Blanc tweet here, who do we blame this for? And it's sort of in this case INA, kind of since April. It's only been a couple of months, but it's kind of a brutal chart.
Yeah, and you can argue that Athena actually is like a real product. You can argue things like Arbitrum, right? Arbitrum is also hitting new lows. But as a farmer, I've noticed that, I mean, I've known this, but like all these tokens, they're just meant to be sold, right? Like the use case is for you to farm it and sell. Even Arbitrum is like the unlocks have started since March. They're giving away like hundreds of millions of dollars in grants and like, on-chain incentives. INA, right? Like if you don't stake your USDE, then you get tokens. And I was also looking like right now I'm farming ETHFi, like EtherFi, and it's down like 50% in like the past week or so because the airdrop is going to happen in like 4 days. So it's like the purpose of these tokens is to be sold. And it really should not be purchased. It really should not be purchased.
You're absolutely right. And I can see your farmer hat and rake in the back. You are the right like demographic for these coins. The reality is that they are farming coins. Farmers make money because somebody buys these tokens. And as you rightly said, it's usually the suckers that are buying these tokens because you can just get them without buying them. You can just farm them for not for free, but like for capital cost. Whether it's dollars or ETH, it's not a huge capital cost. Like normally it's like 5-10%, right?
Yeah, and because yields have compressed so much and the markets are just bad in general. Everyone with billions of dollars, right? In aggregate, they're chasing all this yield, and if anyone can get, let's say, above 20% yield on ETH or stables, they just chase like whatever protocol that is, and as soon as they get their tokens, they're just going to dump. So you can focus you can look into the fundamentals and whatnot, but like right now the use case is to farm and dump, and perhaps if there's only sell pressure for these tokens, you can argue that maybe at some point the price can disconnect, and you can potentially make a bull case for it. But even things like Blast, I think it's like a pretty decent L2, but it just keeps going down. And it's I've made this joke that like L2s this cycle are like the pancake swap forks, where people fund them, people deposit capital, you get tokens, you dump, then you move on. It just kind of feels like that's where we are in the cycle, where there's not that many apps, and the only use case is to bridge, to restake, farm and dump, and then move on. And I think that's why the vibes are deteriorating. There's like nothing to be super excited about. It's more around, okay, like let's just farm and dump all these tokens.
I need to ask you guys this. Like a year ago when we started the podcast, we had a similar mindset to what we have now, where we said like these tokens are going down. There's no reason to hold them. It makes sense to hold the majors, but don't hold these alts. And we also hypothesized, or like some of us did, I know Taiki and I did, that like to get out of this bear market, we would need to invent like a new use case, new applications, etc. But we actually didn't need to do that, right? Like it turned out that BTC went up, everything else went up with it. And then do you think we'll get out of this again without sort of building our way out of it? We'll just get out of it because the majors go up?
Yeah, I don't see any reason why you need use cases. It's just the gamblers get more money and then they go to the casino again. This is so simple.
Do you think we're going to be trending towards like the tokens are valued based on how much value they accrue? Or are we never going to trend towards that? Like, are we on a slow walking journey there, or are we just not getting there?
We have to get there. We will get there, of course. Yeah, eventually. Yeah.
Yeah. I've tried, I've tried buying these coins. Like a year ago, I bought Maker,
Yeah.
and I was like, yo, like this is a DeFi dinosaur that has some token value accrual. Let's ape this, and then it like went up like 8x or something. But like now it's like, okay, like maybe being able to put a valuation to these things is bearish. So I feel like every year that passes, like all my friends slowly turn into like Bitcoin maxis. It's just like people get burned enough on all these alts that it's like, okay, yeah, like maybe I should just stick to the majors, and like take less directional trades. And I guess like that's what you like, both you and you and Jordi do, like Justin and Jordi. I try to shitcoin sometimes and like try to do more degen stuff, but the edge there is so low, it's so limited that it's like really hard, like, especially nowadays.
But let's double click though on this question of who do we blame this for? I think everyone's gonna look at it from their own like selfish perspective. We have like Taran here, these guys do like the most secondaries. This is like sticks, like huge on secondaries. And he says here, if we look at his tweet, that look, this should have never traded at 20 billion. This should have always traded at 2 billion, 3 billion, because if you just let the secondary market trade, this is where it was actually like people, there were sellers willing to take 2 billion when it was at 20 billion. So secondaries are blocked, and he thinks founders will learn that it's better to let sellers exit OTC. So this is something worth thinking about. The founder perspective on this chart, of having this chart, it can't be great knowing that you've had people buy in and that are down infinite. Like your community, your Discord, I'm sure looks like shit once this happens. Is that enough of a motivation to not be so predatory on your tokenomics, which, Athena probably is one of those examples that launched at a very low float, tried to create a lot of hype. They did all the Axie Infinity stuff. We can bring up the Axie chart because that was probably the equivalent of last cycle, where this thing, it ran up infinite based on a Ponzi loop where you had to keep buying more tokens to farm more tokens, and they started throwing gasoline on the fire. And this chart is epic. I mean,
It's insane.
I remember this when it was like at like 100 plus.
Yeah.
Some of the seed investors that were up like 1,000x were asking me if they should sell. I'm like, you haven't sold yet? What are you doing? Like, how are you? They're like, everything's unlocked and they still haven't sold at $100. I'm like, what? It's like, oh, I think it's going to go to 250. What's going on? And this thing, it's at $5 now, so it's down like infinite, but it's still at $1 billion FDV. So you can imagine how many billions it was up then. I mean, it was like infinite billions. I remember there was a day when they announced that they're going to do staking yield. They were going to do like 20% staking yield for Axie tokens. And, the price just like went up and like just skyrocketed because now people are trying to buy to do this. Some of them were trying to hedge on perps, and then the funding went negative. And we can talk a little bit about the implications of this. When the funding is negative, it means that there's people desperate to hedge so much. And usually they're desperate to hedge because it's overvalued. Like everyone knows it's overvalued. And that's when you get negative funding rates. And some of these tokens now have unfortunately done the same playbook where they announce staking, I think, or like forced holding, you need to have this, you need to stake it to get the yield. If you do that, it's like what the fiat system is doing, where you just like pay down debt with more debt. You're creating more problem later on because you're saying, guys, like hold your token, don't sell it. We're going to give you 20% yield. A year later, there's 20% more tokens that you have to get absorbed into the system. So you've just magnified the problem.
It's similar to like ApeCoin, right? Because like I think ApeCoin tried to introduce staking, and Kobe was like, "Yeah, like don't do that." And who do we? Like, and it's similar to like all the sell pressure. Even if you introduce staking, just gets pushed back. It's kind of like the curve liquidations. It's like Michael's just borrowed against this CRV, so he's just like pushed back all the selling to like this year, and like now it's like oh fuck, it's like down so much.
Yeah, it's a good example. But like if you look at it from a simple zero-sum game where there's a winner and a loser, the losers are generally going to be, the retail that are buying at the wrong price because they're not doing enough. It's not even like they have to do a lot of research. They just have to look at,
the CoinGecko FDV.
Look at that. Just look at the CoinGecko FDV as a minimum and just be like, is this thing really worth 20 billion? Like maybe it's just a coin that just got made up 2 months ago. It didn't exist before. Maybe not.
Yeah. So are you saying that like who do we blame is one, I guess, the team and VCs that come up with these predatory tokenomics, and in a way, like they trick retail to like buy these things at high FDVs, and then they just like hedge or sell OTC and eventually get.
I think it's an oversimplification to blame the teams, because like this is literally like their incentive is completely aligned at like launching these tokens at high valuations. They have a duty to their investors to do that in some ways.
That's not like a shareholder thing where you have to maximize shareholder value, because first of all,
what I'm saying, but look at the incentives though, right? Like, yes, we can blame them, but is anything going to change there when the incentives are all aligned to do this? Like
they're not. I think first the exchanges have realized that they're the ones that get screwed because people come in, deposit $100, buy the token at like 20x the price. Those dollars then like disappear, and the exchanges like they have less money on them, and then unhappy customers. So the exchanges are starting to fight back. Retail is fighting back by like buying meme coins, which reminds me of like MAGA 2016 when they're just like, screw it, burn it all down. Like we're just going to vote for like the stupid coins instead of like the official, serious coins. So not everyone's aligned on this.
Justin Bonds, who's like a investor thought leader, he mentioned that, it is like about incentives, because if you're like a dev, you're not really incentivized to scale like ETH, right? And like work on ETH because you don't get paid that much, but you are incentivized to create a new L2 because then you can like just drop a new token, multi-billion FDV, and then just get rich off of it. So the incentive just keeps driving devs to like ship new L2s, where like the base layer just doesn't improve that much.
I don't understand how you guys though like are fully comfortable blaming the teams, the exchanges, the market makers, the founders for retail stupidity, right? Like, is it really up to the insiders to sort of police how retail values something and spends their money? Because most of these cases are not obfuscation. Most of the time, people are transparent with the tokenomics, and it's very clear what the FDV is and what the CIRC is and when everyone's unlocking. Most of the time, like 99% of the time, that's public. But now you're saying like the teams are doing the right disclosures, and we're still going to blame them for retail mispricing these assets.
Eventually, like retail will wisen up. So one way or another, they'll make a mistake and they'll get fleeced for billions of dollars, and eventually things get more efficient. So that will trend. But yeah, absolutely, like they're to blame. And the reality is, like, we all have friends that are investors. Even if we're not invested in something, we'll all know some of the people that are investors. That the space, unfortunately, when you just look at the big VCs and the people that have a public platform, so like the 500 kind of top accounts on Twitter and like the 100 funds, that's not a lot of people, and everybody knows each other, and we're all at the same conferences and stuff. We don't want to. I mean, sometimes you see like the quibbles, like
Yeah.
how did you invest in this founder who's this, and you invested, didn't you do IONET and like all this stuff?
Oh, the Eclipse incident.
Yeah, right. Like there's been a few where we saw some of the VCs go at each other, and then the next day, like, they delete all their nasty tweets because they realize it's like a zero sum. Like they should, like you just have nothing to benefit by talking shit. So if no one's gonna talk shit, and we're just gonna like watch these things happen because some of our friends are in these coins, who's gonna educate the retail ultimately? Like there's a few lone voices, but like who's really gonna teach them? They have to learn by losing all their money.
I think there has to be a few projects, like teams, that understand that this is the meta, and come to truth. Like retail is just, it's just so hard for retail to win. So like maybe they should do like community airdrop, like what Frentech did. The reason Frentech is down is not because of the airdrop. I think it's more because the product is like not good. I think if like an actual like real team did something like that.
I mean, this chart is also pretty brutal because it had the normal airdrop. You could see at the very beginning where it had the airdrop sellers and people making fun of CL and everybody for selling at $1, because like a couple days later, a lot of the bullish people were making fun of them, and it was back at $3. It's down to 30 cents now. I mean,
but isn't this a counterpoint to what you guys are saying, right? With Frentech, there were no insiders with any positions. The CIRC was equal to the FDV. I believe all tokens were circulating on day one. And yet the same thing has happened, right? So isn't that sort of a counterpoint to your guys' thesis?
No, because the product is not good, right? Like if the product was good, like if like Athena did something like this, 100% airdrop, theoretically, like that would have been like everyone would have won, I think, at least if you like farmed it. And then if it was like a very high float, I'm sure lots of people would have sold, and then it gives people the opportunity to buy at a more reasonable price. You can even see this with Layer Zero, because the most recent raise was like $3 billion, and then it traded below like 250 or something, and now it's like somewhere above 3. So if these things launch more fair and the product is actually there's like hope for the future, then maybe it is like a fair game, and it gives people like the opportunity to like buy it.
The Frentech thing is more like the Geo Boden, and we can bring up that chart. I think it's quite similar. Actually, has much more of a Dalai Lama situation that happened initially, and wow. So it was up to 95 cents, and now it's down to 5 cents.
Basically, yeah. Hit $1, I think, like on a wick.
Well, everyone's rotating to the Kamala Harris token.
There you go. That's the real lesson.
Yeah,
this stuff is inevitably going to go to zero. It's just you have to rotate to the just in time.
I think one thing you guys are missing about like retail getting fleeced, though, is I agree. There's this echo chamber on crypto Twitter where like there is a cabal of investors, and it's not in anyone's best interest to say a project's overvalued. So let's all cheerlead everything and support it. And retail is going to get fleeced there. But the other issue is there's like truly no way to even value these things. Like Axie Infinity got to 100 billion or 150 billion. Certainly that's overvalued. Maybe it's at $1 billion now.
First, it's like demand and supply will make the price happen. So if you as a founder, you kind of know, you have a sense of like how much your revenue is, what it's going to be in the future, what's like a reasonable valuation range. And, I kind of respect founders that increase the supply when they feel like it's just not a fair price. I think I don't want to say like specific founders, but there's some where they don't let the price get out of hand. They actually just like unlock a lot of supply for people, just vest stuff early, whatever they need to do, and get the price to normal range. You kind of know what your product should be worth. I don't know. We'll see some more examples. I mean, did we bring up ApeCoin? That was an interesting one. This was a pure like retail product, unfortunately. Like this is not like a ton of funds for buying it. This was a lot of community hype, and it was the same thing. You had these like massively negative funding rates when it was trading at $20. You had some big influencers showing this as like the next coming of Christ. Look, probably like the NFT thesis didn't play out, so I guess that's part of what's to blame here.
And
It's also,
sorry, go for it, Justin.
I think you're going to point out the same thing, but I can't help but notice the Frock AI
Yeah, exactly.
advertisement in the banner directly above ApeCoin.
It's like literally this kind of explains the industry, right? It's like retail is looking at ApeCoin valuation, and then there's a targeted ad for Frock.ai.
Anyway,
I actually have a little quick anecdote on this. I was in a group chat and someone was saying they were interested in creating a meme coin before there was pumped out funds. So this was like several months ago. And they told me there was a deck screener package where you could pay like 25 to 40K to basically like have a meme coin launch kit. And they would basically just like advertise your meme coin all over deck screener to sort of initially pump it up.
Yeah. And if you can share my screen, Justin, this was like a topic recently where Polkadot, obviously there's like nothing there, and someone leaked their marketing spend package, and they pay like 138K to the block for things that no one really looks into. They paid like $500,000 for an animated logo on CoinMarketCap. It's like, is this really where the VC money is going to, right? Like to the all these.
It's not the VC money. It's dot coins.
Where's the KOL one? There's like an infinite amount going to KOLs where no one even knows which KOLs they are, because none of us are like following people talking about DOT. Did you guys see the list of KOLs?
Yeah, I saw the list of KOLs. I don't have it pulled up, but the KOL activation in May and June was like $600,000, and I guess it was like all these influencers that I've never heard of. I guess they're big on YouTube or something. And then there's like the private jet fleet brandization where for 6 months we'll pay $200K to put our logo on some jets, and then hopefully some celebrities will buy our coin.
But to be clear, Taiki, I saw your tweet. In your tweet, you said this is like VC money going towards this. But I think with Polkadot's case, like this is actually them selling their treasury DOT tokens to pay for this and fund it, right? Because their marketing budget was like $80 million for the quarter or something.
Yeah, I guess it's more like a joke, right? It's just like it's like how, like, why are these people like who's leading? Who's the CMO of Polkadot that thinks this is a good idea?
Well, I wouldn't say it's a bad idea, unfortunately. Like, what would the price be? We don't know what the price would be if they hadn't done all this stuff, because there's no usage of the product. So maybe it would be dead. I mean, it's dead, but like, it would be at $1 instead of $5. Bottom line, there's a lot of tokens. We didn't want to go through the whole list. There's Starknet, Manta. A lot of them are driven by, launching on a launch pool on Binance, and that's very bullish in a bull market, and doesn't really like support you when, the FDD and the fundamentals go out the window. So there's a lot of reflection that a lot of us should be doing. I want the founders to reflect. I'm not going to call out any of them individually, but a lot of examples where you can look at your chart of your token and just like think about how you would do it differently to avoid these shapes and maybe go for a better shape.
we need better shapes than the McDonald's arch down. Yeah. I feel like this is like Kobe's platform, and I guess community syndicates could be interesting, where maybe teams should just sell 20% of the supply at like a fair value to like people, like regular people. And maybe that's like a better way to build a community goodwill. But I guess that's also not a fair system because, you have to gate who gets to participate and whatnot.
Yeah, and the last point about this, Jordi, I remember almost maybe a year ago we were talking about this, I think offline. There's an interesting dilemma here for founders in that you basically have to make this trade-off. You have to let your community win a little bit, and it's good to let them win. But by letting them win, you sort of take a little bit of a hit yourself, right? Like you're giving away tokens that you could otherwise sell for a higher price. You're lowering your paper net worth. You're lowering returns in some capacity, but like all of this can be healthy in the long run.
Yeah, exactly. That's a great way to end this segment. We'll, I'm sure, talk about this topic in the coming weeks, but maybe let's move to our next topic. So we want to talk about prediction markets. That seems to be hot right now with the election going on. And Justin, and something that you were saying that you found this very interesting. So maybe you can lead off on this topic.
Jordi, I'd love if you could just start explaining maybe your background. I know offline we were talking about topics for the show and you mentioned that you really knew a lot about prediction markets. So maybe you could just start sharing sort of your background on how you got into prediction markets, what you think of them generally, like if they're a good proxy for getting us close to the source of truth. And then I have a lot of questions prepared that I wanted to ask you that get like really specific about the concerns that we've seen on Twitter about Polymarket.
Yeah, so in my early 20s, when I was playing a lot of poker professionally, I also did a lot of sports betting and a lot of prediction markets. So that was a combination of how I was spending my time as a young degenerate, building my probability skills. I did spend a lot of time on Betfair, which was at the time the biggest prediction market. The liquidity was by far the largest you could possibly find in the world. Sports, politics were the main two things that had a lot of people betting. Obviously, politics is very seasonal. It goes around the U.S. election cycle for the main part, and then a few smaller things like Senate every 2 years and stuff like that. Sports is one that gives you a lot of daily opportunities to hone your skills. But yeah, I've dove in. I even considered I got offered a job at Betfair to manage a bunch of their business at some point. Didn't pay well enough, so I didn't accept it. But I did go deep into the rabbit hole of both the business model, the market making side, the liquidity side. So it's something I'm happy to talk about.
Great. So let's pull up Polymarket, because one interesting thing is Polymarket has become like the go-to betting market for the election. You can see for the presidential election winner, there's been $250 million bet here. And I'm seeing like mainstream media outlets talk about Polymarket. It's certainly the most liquid market now. Just at a high level, like how close do you think these percent chances of each candidate winning are close to the actual number that's unknown, right? Like are these prediction markets highly accurate, or do you expect it to be pretty wildly off?
So at this level of liquidity, when you get to 9 figures, it's pretty accurate. There are some inefficiencies, especially, and we'll see kind of like some of the chatter I was having. But on the lower percentages, sometimes you get like really bulky tails that shouldn't be so bulky. Like something might have 0.5% and then it's priced at 4%, for example, that kind of thing. That's generally a factor of the fact that it can be quite expensive from a capital standpoint to take the no side. If you want to bet no, you're having to put a lot of money and wait 6 months to get a tiny bit of return. So you end up getting like fat tails because no one's willing to skew those. But this 64% for Trump, it's not going to be too far off.
So let's talk about the long tail. So Michelle Obama is a good one to pick on. It's at 4% here right now. Michelle Obama, I think yesterday or the day before, she made an official announcement that said she's really not going to run. There's no chance it's happening. All of the chatter we've seen has said if it's not Biden, it's Harris. That's what the prediction market says. Are you saying that Michelle Obama is, let's say, overinflated here to 4% when really the actual odds are close to 0.5%? Because to bring this back down to the rate of, let's say, 0.5%, you would have to buy no at such a price that you're basically like underperforming the risk-free rate on the dollar.
Yeah, exactly what you said. Now, I don't want to talk about the specific Michelle Obama example because
Who knows? Yeah.
Maybe there's some insight, like whatever, but as a general rule, that's correct.
And then you mentioned that liquidity is a huge concern. So like we've seen other markets like predicted is in the single digit millions, poly markets in the quarter of a billions. How much closer do we get to the source of truth as we go from just like $1 million bet to a quarter of a billion? Is it like the first million gets us 95% of the way there to being accurate and the rest is just honing in? How does that work?
No, I think the first million is just pure noise. I mean, it's probably 20% of the information. It depends on the market, but if it's a US presidential market, then you definitely need 9 figures to get to 90% of the information.
And I also wanted to ask, because I've heard some people say that these prediction markets become highly accurate because it's a way to extract insider information. So like, me and you might be betting on Biden, yes or no, he's going to win, but we don't really have any edge or insider information and we cancel each other out. But the marginal dollar is actually the insider dollar that's betting on that. Like, do you hold any stock in that theory, or is this just purely like a wisdom of the crowd?
No, 100%. I fully believe in the insiders, but this is kind of why I insist so much that you need deep liquidity. You have to think of the motivation of the insider. If the downside upside ratio is not great, they're not going to express their view on these markets, because if they're not going to be able to hit enough liquidity to make, let's say, 500K on the fact that they know something, and the downside is they're leaking and they're found out to be leaking, or they get into some legal trouble or even reputational hit, they're not going to do it if there's 10K of liquidity there. They're just going to let the market be wrong. It's not worth it to fix it. So there's definitely insiders, and they need deep books to act. Now, the tricky thing with these markets, generally bootstrapping the passive liquidity, as a market maker that's just placing passive bids and waiting for somebody to hit, you are at the mercy of insiders, and you're at the mercy of not even just insiders. It could just be like a headline, new headline, Biden had a heart attack. Like, you're sitting on the bid, bidding him at 13%. It's about to go to zero. What is your motivation to be sitting there? It's kind of like you're giving a free option to the market, because that's what passive bids are. They're like a free option that you're giving out. The reason why people generally put them out is because they get easy, cheap, dumb liquidity to fill them, so they make spread. So you need enough non-insiders to trade to make it worth it when you're getting the toxic fills, and it's hard to get that ratio right, and it's why you usually only have one big market per cycle. So if poly market is doing really well and it ends up being the main one, it's really hard to bootstrap a second one, because people are going to want to just provide liquidity on the first one.
Yeah, I was going to ask, do you know of any of your colleagues, other market making firms that are actually have started to market make on poly market? Like, how much of this do you think is just organic retail, professional speculators, and how much of the liquidity here is, professionally provided by market makers?
So it's not going to be the same type of market makers that you're used to for financial products. There are specialists both for sports and for politics that focus just on this. So it will be a lot of professional market making, but it's not going to be your, Cellini and Wintermute. It's going to be like the guys that are just focused on this stuff. I mean, GCR is one that he was like the biggest politics bettor in the world for years before he did crypto. So it'll be people that are just very focused on this one category.
Got it. I want to get to the Dan Robinson thread, but there's one last question I want to ask. So by far the biggest criticism I see of Polymarket specifically on crypto Twitter is that Polymarket has this huge bias because crypto native people are the ones that use Polymarket because you have to use USDC to use it. And we all know, or we all think we know, that crypto people lean right. So they're going to have a bias towards betting on a Trump win. Now, personally, I think I completely disagree with this because that would just mean the market is completely inefficient, right? If we knew there was a Republican or right-leaning edge, then you could just bet the other side, and on average, you'd come out a winner because the market's mispriced. Like, do you agree with my thinking, or do you agree with sort of like the standard pushback against Polymarket that it leans conservative?
There's always going to be people willing to come in and take the money if there's enough of a mispricing. So I'm more on your side. Generally, like, you can see a little bit of skew bias. You see this, for example, whenever like England is playing in the World Cup, or some team that has a lot of people betting on them, the odds might say England's going to win the World Cup 20% of the time, when the reality is like 16%. And even though people know it's mispriced, it's got so much flow that it'll misprice, but it can't misprice too much. There's always going to be somebody willing to come in, but there's a little bit of truth to it. I remember Conor McGregor.
I was at that fight when he broke his leg, and I remember people telling me he's going to lose, but he's the favorite because everyone wants to bet on Conor. You don't want to bet on the other guy.
Yeah, and even when he was fighting Mayweather and he was a dog, the odds were still giving him like 20% when he was probably like 1%. Like, he's not going to beat Mayweather at boxing, but some people wanted to bet on him. And even though people were providing liquidity to match the demand, they didn't fully arbitrage it to the fair price. So there's a little bit of that, but I think in Trump's case, it looks pretty reasonable to me.
Got it. And then I know you responded to this thread from Dan Robinson. Dan Robinson basically points out the inaccuracies of prediction markets. Do you want to just give a high level of his case of what he's saying, and maybe sort of explain his side of the argument that prediction markets are not a perfect oracle for the source of truth of, like where these odds should be at?
Yeah, if you click on his like initial survey he was trying to do, he says, okay, if an event happens at 75% probability, what is the prediction market probably going to price it at? I see you bet on 75.
No, these are the final results. I didn't vote on this.
Okay. Yeah, people just assume like 75. Yeah, it can be anywhere between $0 and $1, because there's multiple factors to look at. One is we see Josh Lynn below saying that it's going to be less than 75 because people are risk seeking and looking for convex payouts. That's not necessarily true. There could be people that are looking to hedge. They like the outcome because they're already priced in for it and they just want to hedge. There could be, so you can go back to his response, but he says the answer is D. It could be anywhere from 0 to 1, which I agree. It could be anywhere from 0 to 1. So I think what Dan Robinson is trying to point out is that there's a lot of reasons why the market might be pricing differently, and partly it's because the outcome itself affects the underlying. So let's say you're betting on, is the world going to be hit by a meteor tomorrow? And let's say the chance was 10%. If the world's going to end anyway, then I don't really care about winning the bet. So I will never bet on yes, and it'll just be at 0%, even if the chance is 10%, because there's no point for me to win that bet. I might as well bet no and hope that, I can make a few cents and the world keeps existing.
I wanted to ask one final question. So like just to pull up the Democrat nominee prediction market here. I don't know if you guys were watching this as closely as I was over like the last 3 days, but this was like one of the most volatile things I've ever seen. It seemed to me like every time there was a new headline, like the odds would flip. Like we found out Joe Biden was meeting with his family on Sunday, and then suddenly Kamala was the front runner. And then Joe Biden came out and said he wasn't going to back out, and then he became the front runner. And there was just so much volatility, and like the market was just swinging in massive amounts. $83 million has been bet here. So presumably a lot of capital was like constantly like changing positions, betting on different outcomes. Does that indicate at all that like there's less insider activity than we might have thought, because like the market was clearly like inefficient if it was just like being so volatile so quickly, or there's just no correlation there?
Yeah, probably like less insider on this. Sometimes nobody really knows what's going to happen. I mean, Joe Biden himself might not know, like the insiders might not know. I saw much more volatile than this. If you were trading prediction markets during the 2016 Hillary Clinton Trump election, there was a moment where it went from 90% Hillary. I think after like some of the first states had come out, it was looking really, really strong for Hillary. And then within like 10 minutes, it like had flipped to like under 50%. And it was just like some crazy fluctuations based on just a few polls coming in from like Florida, I think at the time. So
yeah, I had like one question. So if you pull the Democratic nominee, it's like Biden is leading, right, at 44. But if you look back to the actual election, I think Kamala was leading above Biden. Does that mean that the market is inefficient, or does it mean more so that, if Biden wins the Democratic nominee, he's less likely to win. But if Kamala actually got the nomination, her likelihood of winning is much higher than Biden. Therefore,
Yeah, it's definitely
she
the
priced at
latter.
13.
Yeah, for
Okay.
sure. People obviously can do these basic conditionals and just filter in. They'll filter down from nomination into winner. So they'll say that if Biden is the nominee, he only really has 25% chance to win. So they'll multiply the 44 by 0.25.
Got it.
And the last question, maybe this is a good way to close out the topic. If you could only use one, would you rather rely on like the classic polling, the Nate Silvers of the world, and like the polling data, or would you rely on the prediction market data?
Everybody knows prediction market by far better. Like it's not even close because they're the aggregator of the polling data. So it's a
So
clear.
do you see us like heading to a world where Polymarket or something like Polymarket replaces this idea of polling? Because polling is so pervasive in politics. It's like even Trump and Biden to this day, they talk about how they're leading in the polls and they're winning in polls in certain key states and whatnot. Do you think like over the next decade or so, like everyone's going to be saying, "Oh, I'm leading in the Polymarket," if Polymarket continues to be the biggest one?
It needs to get bigger. It needs to get into the billions of dollars trading. I think part of that is sorting out the regulatory side completely. I'm not exactly sure Polymarket has any regulatory issues, but you want to just have full liquidity where we've heard it like rumors sometimes where campaigns or, just like we talked about sometimes with like AVO hyperliquid pre-market that the team might like buy the token
Yeah.
to make people think it's going to launch at 15 billion FTV and it launches at 5. If you're going to be using it as a talking point at a debate or something or at a convention, you don't want to make it less than $1 million to like move the market in your direction and to be like actually reliable.
Yeah, also very interesting. I believe Polymarket is using just like a standard AMM. So all of, if you look at the prediction, the election winner, these are all like binary outcomes and they're all individual. And I believe they're all just like straight AMMs. You can see how much like you can move the Polymarket for Donald Trump. If you start getting into the 100,000s, you're already moving the odds from 64 cents to 66. If you were to put $1 million in, you basically push the price up to a dollar. So pretty inefficient markets right now as far as like old school AMM design. It'll be interesting to see how they.
On the top right, if you click on market, is there like a limit bid and then
you can do limit orders.
Feel like an AMM. Okay.
Yeah.
And then what is AMM? Like, can you provide liquidity?
You can provide liquidity. Yeah, I'm not sure what the AMM toggle, how the AMM toggle differs, but let me one second.
Those comments are ridiculous.
Yeah. Maybe there's both an AMM and a limit order book. So maybe there's both. Maybe like they're overlaid on top of each other is probably more likely.
And you can also see like the spread here in the order book, and then you can see they're also giving rewards. I thought this was hilarious though, but the rewards are only 600 USDC for liquidity providers who provide within a 1 cent price spread, which I thought was like a hilariously low amount of incentives. But that just goes to show, I guess, like this thing is working without incentives, which is pretty cool.
Yeah, I think I'm always of the opinion that these things eventually need to just become a limit order book. It's by far the best price discovery method. Anything else is inferior. And I understand it's hard sometimes to get enough liquidity, to get enough market makers, and that's part of the challenge. So that's kind of why you get these intermediate solutions. But yeah, Betfair, I guess, is the gold standard for doing it properly. And yeah, so here we can see what Betfair looks like, which I think is really the right way to do this, where if you want to place a bid, you just decide what price. And I think Donald Trump at 170 is a decent size, and you can see the outcomes that will happen in either scenario. The cool thing is you can bet different people, and then you only pay on your profit, on your net profit. So you can eventually cancel wins and losses out in the same book automatically. some people were saying that this is like an amazing thing the Polymarket's doing, but this is sort of, it's just table stakes. You need to be able to cancel out your wins and losses.
It's so interesting though. Look, it looks like this market, it says matched 23 million pounds. Jordi, is that, it looks like that's changed to 13 million pounds. Is that how much volume has actually been matched here? And so like how much has been bet on this market? So Polymarket's like an order of magnitude more.
Yeah, because now this is only like available for UK. They've been very strict about giving accounts to people not in the UK. And I'm in London right now, which is why I'm able to use this. But you can see that for 23 million bet, there's only like really a lot of liquidity on the inside Trump bet. Everything else is pretty sparse. So let's say you know that Gavin Newsom is going to be the nominee. You can probably only get like £1,000 in. Unfortunately, you can't make a lot of money.
Polymarket has good product market fit.
Yeah. Cool. And before we go to pasta, given that we're in a little bit of a bear market, I'm just kind of curious to ask the two of you, since you're active in the space and doing things in the space, has it affected your roadmaps? Are you changing your strategies? Or maybe Taiki, you can tell us how you're seeing it.
Yeah. So I guess I run a community like pseudo community research firm. And when the market started pumping earlier this year, I was like, okay, like I need more brain power. So I already had 2 analysts, but I hired 3. But recently the market's been pretty slow, pretty choppy. And it's really hard for me to figure out like what the ROI on that spend is. So in the past week, I unfortunately had to let go of 2 people. Kind of sad, but
is it the first time you had to let someone go?
Yeah, first time. Yeah. They were part-time, so it's not as hard as, like having a full-time employee and having to let them go. But when I broke the news, I could see the sadness in their eyes, which was kind of sad. But it is what it is, right? I think we all operate some form of a business. Like we all operate in the space. And I think it's so cyclical that you do have to, cut costs, come to truths with, okay, like, is it worth the ROI? Like, is the money spent worth it? And yeah, that's kind of what I had to do recently. How about you, Justin, or Jordi? Because you both operate business as well.
Yeah, I can chime in. Curious to hear your thoughts, true, Jordi. And I think maybe we could dedicate a larger segment to this if people are interested. So let us know in the comments. But I think like the name of the game for startups, or really like any organization, is to be able to pivot when something isn't working and try to get to like an MVP, a minimum viable product, as soon as possible to see if you can get product market fit. And for us at Astaria, like we've been in the lending space for 2 years. So we raised money on the idea of an NFT lending app. We launched 2 iterations of that, but our timing was off and we didn't have product market fit. So NFTs were dying. We launched it when NFTs were dying. No one wanted to borrow against their JPEGs, and JPEGs have since never recovered. And so we pivoted from that to an ERC20 lending product. And unfortunately for us, we weren't quick enough. We just didn't build a compelling enough product, but we have seen some traction there, but I wouldn't say clear product market fit. And so now we're in this point in the cycle where everyone knows that DeFi is in a tough spot. It's unclear where DeFi will be in the next few years. And so now we're in the process of exploring a pivot again to a new Web3 social application. And it is really tough to go through those different cycles and to sort of be reacting to how volatile the market is in your product, because ultimately we all just want to build and deliver the best products to users. But because we're in an industry that is so volatile and dictated so much by price, we find ourselves sort of switching up our product to sort of try to meet the market where it is. So it is challenging. One other little tidbit I'll say is we were talking to an investor about our lending application, our ERC20 lending app. And we were sharing how it's innovative, how it's different, seeing if there was a way we could work together. And I'll never forget, he said to us, well, on one hand, DeFi is in a really bad spot now. Who knows if we're going to see DeFi tokens do well. But he said, on the other hand, DeFi has been around for over 5 years now. And so it's sort of like a de-risk category. And when I thought about that, I was like, I'll never forget like DeFi being 5 years old. That's just such a long period of time. And if you look at the last 5 years in the DeFi space specifically, there really hasn't been much new products created like that are really 0 to 1s. And so that's been something really interesting to think about. And yeah, we've had to pivot a lot, and it is tough. And hopefully, eventually, we get somewhere where we'll have good product market fit and can finally launch our token and do well and get this thing out there.
Look, I mean, every time you pivot, you go with the new knowledge that you've acquired from the experience you just built, and the things that didn't work out. You learn a lot from them, and I think it's actually good to pivot because this space is very new, and a lot of the stuff that people thought was gonna be a big category just doesn't even exist anymore. If you have a strong building team and you have good technical expertise, why not go where the interest seems to be? If it seems to be in SocialFi, then it's not like a cyclical thing where 1 year it's SocialFi and then it's going to go back to it's probably just a one-way road, and you're trying to keep pace and get the timing right. So I think it's good to pivot. The one thing that surprised me is that this like infrastructure only investing has worked for so long. I think we're finally starting to see for the first time in like 10 years since like the first polychain fund, it could be the first signs that investing just like in infrastructure and L1s that seem to get all the premium of being an L1 and the infrastructure premium, that seems to be coming back down a little bit. We're seeing with the latest launches, it's not so clear that you can just launch any blockchain and get multi-billion-dollar valuations on it. I am a little bit relieved because it never made sense that you give these premiums to these chains that no one's actually using. There's no users, there's no activity. I would much rather see, even though I think Polymarket's overvalued, things like that get the big valuations, and it does feel like we're due for a rotation into application layer.
Yeah, I'll also say I was listening to Chow's Good Game podcast, and he was talking about how it really is a good time to build an application. It is harder to get funding for an application than like a layer one. I agree that's changing now. But as Chow pointed out, and it's actually true, is like chains are paying massive sums of money for projects to come to their chain because there is nothing more valuable than an application right now. The application is actually the really novel, innovative, useful thing. The chain is the commodity. And it, hopefully that just means we're going to get more and more apps and better apps.
I think Anatoly from Solana said this, where he wants the total aggregate market cap of all the apps on Solana to be bigger than like Solana market cap itself. And I think that's like a better way to think about it. And I know for a fact that Solana is like handing out like massive grants to anyone that's like building actual consumer apps. So I think that's kind of the direction Solana is going towards, right? Like maybe more experimental use cases. And like maybe ETH is still kind of stuck into like this research heavy, ZK rollup, infra, aggregate liquidity, like optimistic superchain, like, that type of meta. So it'll be really interesting to see how 2025 rolls out. I actually think it's also like a really good time to like fund and invest and also build apps, right? Because for crypto to go mainstream, like we need apps. So someone has to make it.
That's been the main mispricing in the market, I think, for years, is just the overvaluation of the blockchains, as if they have this like halo effect, like wow, avalanche, ooh,
AVAX is money.
The reality is that the founders have realized it because they're the ones building it. They're like, we're not doing anything special. This is just like a friggin' blockchain, whatever. Like you need culture users, you need like all the other stuff. And we've seen examples, some public, some not so public. When I say public, it's probably the AVAX meme coin fund, where they're like, well, we might as well spend $100 million buying meme coins, and that'll, maybe increase our valuation by more than 1% that it costs. I've heard that Solana has probably done quite a lot of the same with supporting things on their chain. I don't want to get into details, but spending their money on that layer because they realize it's actually the longer term value is bigger there. So might as well rotate the halo effect L1 money into like the further down the chain.
Yeah, I mean, just imagine how successful our space would be if we had 10 apps of the same magnitude of success as Polymarket right now with the mainstream. Of course, like we have Uniswap and its incredible Aave, Solana apps, but I think Polymarket is like really one of the few applications that has entered pop culture, and I think it's going to be really an incredible election season for Polymarket. Right now we're at a $250 million bet on the presidential winner. Like clearly that number is going to $1 billion over the next several months. So, I mean, just imagine where we'd be if we had 10 apps that hit the mainstream like that and obfuscated crypto away from their users.
Yeah. I mean, we'll see if these things are based on regulatory arbitrage. The fact that
it's possible
accessibility that otherwise is hard to get, or if there's deeper reasons for replacing Web2 products. Cool. Let's finish with a pasta of the week. It's been a good reflective episode. So let's see if you guys have reflective pastas. I know I do. Do you want to kick off, Taiki?
All right. So I think this is a good pasta given what we talked about in the first half an hour of this episode. But let's wait for this to load. This is like my fiance, right? And her dad. Like, does he even have real money? He's not broke, Dad. He's just waiting for alt season. So, this is the story of my life. And unfortunately, the story of my fiance's life.
When you're in crypto, you have those questions a lot, right? They come up.
Yeah, like isn't it all a Ponzi? Like, isn't it real money? Or is it
He's
even
not,
real money?
He's not broke, Dad. He's just waiting for the next Celestia airdrop.
I'm still waiting, dude. I'm still waiting. I've staked. I've auto compounded my rewards. I'm waiting.
All right.
It's like I don't want a bull market for the price to go up. I just want a bull market so that when I tell someone above the age of 45 to 50 that I work in the crypto space, I don't just see like a look of disappointment and sadness. Like that this, I want to see like a little smirk or a smile.
I want them to be proud of you. Yeah, proud of us.
All right, Justin, what do you got?
Yeah, so this might offend some folks, but it is July 4th. And so I think this is a very topical one. Also with ETHCC coming up, a lot of us are headed there. I know Jordi and I are going to be there, so make sure to say hi. But this is the mental model of the West. We've got the USA, and on the left curve and the right curve, we've got by far the dumbest people in the world, and we also have the brightest people flocking to the US. We do the dumbest things and also the best things. And then you just have Europe in this like complete mid-curve center. So sorry, Jordi, if that's offensive to you. I know you're in the UK right now, and to our European listeners, but I think this is like a perfect encapsulation of the West right now.
No comment.
No comment.
All right, I have a reflective pasta. And this was posted by Recti Medius. It's all about perspective, and you got the one guy looking at the stars saying, "Looking at the night sky makes me realize how puny and insignificant I am on the cosmic scale." And then the Chad says, "I am the result of 14 billion years of cosmic evolution. I am a thermodynamic miracle. I am the waking universe looking back at itself." So it's all about perspective. It's maybe a tough period.
Which one are you, Jordi? I think you're the guy on the bottom. Yeah,
I'm trying to be the guy on the bottom. I think that's what we should all ascribe to. Yeah, it makes a lot of sense. Like there's no reason they both make sense, but there's no reason why you shouldn't be more like the Chad. So let's try to take everything with a positivity and yeah, I think there's always opportunity, and even when the markets are red, maybe there's some interesting opportunities. So let's hang in.
Thanks for that, Jordi. I'm going to continue to stake my TIA for the next airdrop.
You are unburdened by what has been, by what could be with TIA.
You're a thermodynamic miracle, Taiki.
How am I still alive? How am I still here?
Oh man.
Actually, maybe I let go of my analysts so I can fund my TIA staking.
Fund one more TIA. Just keep firing them so you can keep buying one more clip. Just one more clip.
Just one more. Just one more.
All right, everybody. Well, thanks for joining, and I hope you had a good July 4th. We'll catch you next week. Take care.